much for being with us through the entire four series talk. It's been mind your business, literally, not the sarcastic way, no pun intended, but just to mean that, focus on your business in a more positive way. Our guest speaker, Mr. Njeru Karuana, has been very amazing, an expert on management issues. He's a management consultant. Broke down the entire series into 4 vital sessions. The first one, the legal affairs of a business. And remember, the entire thing is about how to start, manage, and run a business. The first one was the legal affairs aspect. Of course, we had the second one, which was business development, which I believe is also a backbone in every business. You will need your clients on board. The third one, of course, was operations. What falls under operations, the people, the premises, all those things. We are able to know what exactly constitutes the operation of a business. And of course, today, the penultimate of our series, which is the most important bit about any business. Today, we are talking about finances. Finances is the crux of any business, and he is laid it bare. You need to be self-disciplined, and finances are about you, and you are the finances of your business. So it's one of the aspects that you really need to be very careful about. So we are hoping in the process of you following and listening through the conversation that we'll be posting on our YouTube page, we are hoping you are going to find this meaningful over and over time. These are skills, as he says, that no single business, be it an individual, be it a corporate, be it government, no business can run successfully without these 4 components. So you can imagine they've been broken down in 4 sessions. People go to university to pay for all this, but now we've got at least the knowledge to do this. Anyone who needs to contact him separately on management, consultancy, talk about your business, have it on the right path, I believe he's here and is more than willing to participate. So, Mr. Njeru is here. Thanks a lot. Mr. Njeru, I believe, has something to say. Mr. Njeru?
I think for me, first of all, it's the sheer excitement of having a conversation with prospective business owners.
Okay.
Most of the time I spend with people who have been running business for some time and something is not working right. That is the moment at which business owners think of bringing in a consultant. But you see, when you have got the chance to talk to people who haven't started, in a way they haven't made any mistake.
Correct.
It's exciting because some of those businesses could avoid some mistakes that other businesses could have made. Of course, as you rightly point out, what we are discussing really is the tip of the iceberg as far as managing businesses is concerned. But they are the fundamentals. Yeah. So if you start with those fundamentals, you can actually make them grow. Okay? Regularly, I offer consulting services individually to organizations, CEOs of organizations. Yeah. I often hold in-person courses. I think the easiest way would be for you to come to the academy. Me Inc. Academy is on Riverside Drive.
Riverside, just here in Lavington.
Yes, it is an entrepreneur's ecosystem, an entrepreneur's hub. We call it the beginning, where you find dozens of other entrepreneurs who are struggling like yourself. Professionals who can help you in all ways. You can also, if you search Me Inc.
Me Inc. is M-E.
Yes.
Then INC.
Yes, it is Me Incorporated. Basically, what we do there is to sell you as a person.
Yes.
You are a business. All we have to do is give you the supporting infrastructure.
Okay. So you just walk in.
Yes.
It's a plug and play system.
Exactly.
Good.
So if you have any anxieties, at Me Inc. We even have a clinic where you can actually meet a psychiatrist to engage with. If you have some pressures, you can actually come and sit with a professional who can discuss with you your problems. If you're running into problems with taxation, you can come and find some tax experts. If you're having a problem with software, you can come and you can get. You see, so the whole objective is to help entrepreneurs interact with trailblazer, people who have gone through the same problems, the people who have defaulted on loans in the bank.
Yes.
How did they manage them?
Okay.
If you feel like you're about to default on your loan, how should you manage it?
How do you manage the situation?
How do you manage the situation?
Okay.
And all sorts of other problems. If you're struggling with marketing your business, how do you actually do it? Come and sit with experts. You see people who are the same struggles as you.
Yeah.
Or you can come, if you are struggling with digital marketing, you can come for our digital marketing bootcamp.
Yeah.
And then you can be able to learn all the tactics of
doing it.
If you're looking for a space, a co-working space,
you've got a co-working space.
Yes, we've got co-working space
for
tailored for professionals, lawyers, engineers, consultants. So at Me Inc., we just have what it takes to enable you become an enterprise.
Okay, that's good.
By giving you the entire supporting material.
The ecosystem on what you need.
Yeah.
I need to visit the place.
Today will be the last of the sessions that we had planned to share during this Mind Your Business series. We managed to look at handling money or managing money or thinking about money from before the business begins, during the time when the business is operating, after the close of your business cycle, usually a year, and then a number of peripheral issues that always surround a business, issues of taxation, issues of audits, issues of compliance, issues of controls. Why this session was important is because the entire objective of running a business is to make profit, and the measuring tool for running a business is money. Managing a business is fundamentally one of the most important aspects. What my hope is that as much as managing money properly has got so many tedious little processes, my hope is that the people who are starting their own businesses will start mastering the discipline to be able to follow those processes, keep the documents preserved, keep them in good order, and so that when they do their final accounts, they don't run into any problems with the regular authorities. Look at the journey. You begin by developing an idea in your mind. You say, I have an idea that can solve a particular problem. I can set up a law firm in the town of Isiolo. You see, you begin with that as a thought, isn't it?
Yeah.
Then maybe you do inquiries, you talk about the people around there, you realize, yes, I have a business case there. Now, if you want your business to be sustainable, think about money at that point in time. Think about money futuristically. For example, say, how much money would I have to need to set up an office in that town? What are you talking about? You are talking about leasing an office, buying furniture, fixtures, filing cabinets, computers, technology. All those things that you will need, they form what we call your capital budget. So this is money before you start
the business.
Okay? Then you say to yourself, there will be a period of time where the amount of money I am receiving is not enough to cover my expenses. There's a famous example given of a company called Coca-Cola that in their first year of business, I think they sold 25 bottles of Coke.
Bottles or crates?
Either bottles or crates. Something ridiculous like that. Okay?
Yes.
You see, the problem with businesses is sometimes you start a business because you have just left a job. So you anticipate that the business is going to generate adequate revenue to replace your salary, the one you have just left. So you are not patient. You do not give business time. A lot of businesses don't break even in year 2 or year 3, and there's nothing wrong with that. In fact, there's nothing wrong with businesses making losses. I mean, we have been reading about Kenya Airways making billions, losses in billions. Yet their revenues are also in the billions. You see, but the value the business creates is important for the business to continue being alive. So there's nothing wrong with your firm making a loss or a deficit in the first couple of months. So what you do with that? You structure your business, say, I'm going to be the partner, I'll give myself a salary, I'm going to have a clerk, I'm going to have a messenger, I'm going to have a driver, I'm going to have, all these are my expenses for 1 month. Then you say, supposing I do not earn any money for 6 months, how would my business survive? So you take that total, you add that total to the total of the capital expenditure. Then now you get the figure that your business requires to get started on a stable footing. So where is the money? Later on, I'll be talking to you about the great accounting equation, which says assets equal to capital plus liabilities.
Yeah, correct.
Now, you know the word liability in general conversation is taken very negatively. In fact, when there are people you don't like, you call them, these people are liabilities. But from an accounting sense, it's an important part of a business. It means that everything that you have or everything that you need can either come from your own money, which is called capital, or you can get it from other sources. You can bring in money owned by other people. That amount is what is called a liability. So you say, I need 2 million shillings to start my farm. Before I start, I already have 1 million shillings. Now I am going to look for sources for the other million so that my business will not run out of money. That is very important. Then now you start doing the magic of thinking forward. You say, the capabilities I have as a new farm is to get myself 2 new clients every month. So you map that along the months and you say, if I was to get 2 new clients every month and my estimated billing per client is maybe 50,000 per month, how much money would I have coming in every month? In the first month, I'll be having maybe 100,000 from 2 clients. In the second month, I'll have 200,000 from 4 clients. And you project that for a 12-month period, a 24-month period. Typically 36 months is an acceptable period for making futuristic projections. Then you say, if that is the money that is coming into my business every single month, what are my expenses? What is my rent? What is my traveling expenses? What is my photocopying? What is my salaries? What is my telephone bills? What is my electricity? What's the total of those bills? Then you match now the money coming in against the money going out. So when you do your cash flow on an Excel sheet, the deficit you get at the close of last month, you put it as the opening balance of the new month. Then you add the revenues for that month, remove the expenses, you have a smaller deficit, you put it at the top of the other month, and you keep going like that until you see where you'll break even, where you will not have a negative. So businesses measure themselves according to how far they want to break even. Now you can say, if I take only 2 clients a month, I'll break even in 6 months. If I put effort and I get 3 clients, I'll break even in 4 months. Or you can say, I have enough money to keep me for 1 year, so let me not struggle too much. Let me get 1 client a month, and then in 12 months, I'll break even. So the cash flow projection is a very powerful tool of thinking about money before the business begins. And I can assure you folks, many businesses collapsed before they started because they never gave this conversation a thought about money before they started.
Sorry to cut you short, Mr. Njeru. And let me just understand, and also maybe for the sake of the listener, you are saying that even as you are starting, you need to sit down and actually have a picture of the amount that you shall generate for subsequent months going forward.
Exactly.
And you work towards it.
You see, you can't get where you're not going. There is no way you can plan to get 1 million shillings in your business, then you get 100 million. It's not possible. Because all the things you will do will be geared to how much you want to achieve.
Okay.
So for example, if you say, for me to justify owning my own firm and not working for Mwanza and Company Advocates, I must have a revenue of 500,000 a month for me to justify that.
Okay.
So you say, that is my target. So what are all the things I must do? Maybe I should not start alone. Maybe I should start with an associate. So you work backwards because you only achieve what you started with. So that's very important. And believe me, a lot of businesses, even when they are starting, if you ask them to give you their financial plan, before they even walk around, they don't have. It's no wonder nearly 3 out of 5 businesses collapse.
Okay.
Maybe even more.
Okay.
Because you see, they were destined to fail. They started already failed.
I thought you start. I mean, I thought you just start a business knowing that today I want to make sales, you know, or today I just want to do collections as a law firm.
Yeah.
Then I do the same thing the next day, tomorrow morning.
Yes, but you see, there's a minimum. It's like setting up a restaurant with 1 crate of soda. You see, even if you sell your whole stock, the amount of money that you've made, you cannot. Let me tell you where the problem with this thing is. We lack the courage because we think that if we think too much, it will discourage us from starting.
Okay.
You see, even when you are in a hole, the first thing you want to know is how deep is the hole. You can't close your eyes and say, I know I'm in a hole, lakini siku moja nitatoka tu. So you don't know how to. You see, that's why I'm spending so much time talking about this, because some of our colleagues in here will shortly be launching themselves into business.
Yeah.
Now, when they are wherever they are, they need to hear me on this conversation.
Yeah, okay.
Think about it.
Okay.
Give it a thought. Have the courage. Sit with your friends. Talk with other people who went before you. Ask them, how much money did you start out with? Then you can now start looking for alternative ways. You can say, for example, instead of me having a full-time clerk, why don't I have a clerk who works only 2 hours a day?
Okay.
So that now I'm not paying a full salary. I'm paying only the salary of 2 hours a day. Instead of having a full office, why don't I go to a co-working space when I'm starting? So you are able to work backwards and say, I can be able to manage myself with the budget I have through this period using the following technique. Of course, the activities of your business day to day will bring in income and will be exposed to expenses. So you can project that over 12 months, my total income will be this, my total expenditure will be this, so my profit or loss for the year will be this, or my statement of comprehensive income at the end of the year will look this. By that time, you have not even left your house to go and look for a space.
Okay.
You actually have your pro forma accounts with you.
Okay.
So you even in your imagination, you are trying to see what kind of organization am I creating that will give me this pro forma financial position. So this is an interesting conversation. Please talk about it with your friends, talk about it with your partners, but pay attention to it.
I think what we do then, again, before you get to the next item, maybe we can invite one person to just give a brief comment about what you've said, because I seem to be having a completely different perspective. And my perspective is that the moment you sit down and start thinking critically before you start, you will never start. I think my radical advice is that you get out fast. Then go look for clients. Then work about projections once you've started. I don't know whether there's anyone who shares my ideology
we can hear the audience views. But one famous adage is if you plan to fail, no, if you fail to plan, you are planning to fail.
Now that's a counter.
And you know, surprisingly, can I tell you something interesting? Surprisingly, the people who engage in planning extensively is actually advocates. Do you know why? When you have a serious case before you, you spend sleepless nights planning that case. Are you getting what I'm saying?
Correct,
Yani you spend time, you engage with your partners, you call friends, you plan the strategy,
Okay.
you plan so much.
Okay.
So planning is not alien
Okay.
to the legal profession.
Something that is there.
You see, all I'm saying is the same vigor, the same energy you have in planning a case.
Okay.
You see, a lot of people who are professional, they are very good in the thing they do. But they are not good in all the other things that support the thing they do.
That support the main thing.
You see, the main thing is there.
Yes.
You are excellent at
Yes, and you have the expertise.
Yeah, but you see, why we are having this series called Mind Your Business, we are saying this is what you are very good at, but there are all these other things that help you.
Yeah. You know, sometimes the problem is when you are, when you're trying to argue or share ideas with an expert,
Yeah.
no matter how strong you feel your point is,
Yes.
you'd always want to give them a benefit of,
Benefit of the doubt.
benefit of the doubt. So that is where I am. So